In this video, we will be going over physician loans. My name is William Singh. I'm a local real estate agent in the Portland, Oregon area. If you have any questions whatsoever, feel free to reach out. I'll make sure to leave my contact information below. Now let's dive into what is a physician loan. A physician loan is sometimes also known as a doctor loan, but this is something that can also work for a lot of other medical professionals, and sometimes it depends on the loan program. So a bunch of banks typically will have a physician loan, or they have a particular loan product that is for physicians, and it kind of depends on what those terms are or what the requirements are for those loans. So just something to be aware of. These can sometimes be applied to dentists or veterinarians. They may need specific licenses or things of that nature. This also works for physical therapists with doctorates. So just know that this might be something to be looking into if you are a medical professional. There might be some loan assistance for you. So now that you know a little bit more about what the physician loan is for or who it's for, let's dive into the fantastic terms that they have. Typically, when it comes to a physician loan, they will have 0% down, which is fantastic. Sometimes this goes up to 5%, but with this, it means that you have a very low amount down needed in order to actually purchase a home. Another thing to note is that this has no mortgage insurance if it's less than 20%. Mortgage insurance is the insurance you have on a loan, usually throughout the lifetime of the loan if it's an FHA loan, or up to 20% when you have 20% equity in that home. With this physician loan, you don't have to deal with that whatsoever if you have a down payment that is less than 20%. So that means that you are able to save a lot more money in the long run. Some of the common requirements for these loans is that you have a employment contract that is signed. So that way you don't need any kind of pay stubs or things of that nature. Another thing that you'll usually need is a credit score that's at least 680 to the 720 range. That's kind of the baseline. If you can get higher, that usually means that you'll be able to have a better interest rate or lower interest rate. So again, when it comes to interest rates, the higher your credit score, usually the lower the interest rates you will be getting, which is a good thing that will save you money over the lifetime of the loan. Some other potential requirements that do come up with these loans is that you'll need about 4 to 6 months of reserve. So this is usually the amount of money that you would need to pay that mortgage for the 4 to 6 months. Now, this might sometimes be lower and sometimes be higher with particular loan programs that you're dealing with. Remember that physician loans are specific to that bank, and there's a bunch of different types of physician loans, but broadly speaking, they may or may not have these requirements. So this is one of those things that you definitely want to be talking with the lender and making sure that you understand whether or not you would qualify for that specific loan. One of the other benefits of the physician loan is that usually when you are graduating from these programs or medical programs, you're going to have a lot of student debt usually. And one way that these physician loans mitigate that is that they will look at income-based repayment programs and really check your debt to income ratio, or DTI, using that. So that way it will help you in the sense of being able to qualify for these loans. So just something to keep in mind. Some residencies are also not covered as well when it comes to this loan program, or if you are an attending with 7 to 10 years under your belt, just something to keep in mind that it's really geared towards or primarily aimed for newer medical professionals, but it doesn't necessarily mean that you can't find another loan product that might work or be a better fit for you. So now you must be asking yourself, how does this physician loan compare to other loans? One of the things to note is that typically there's going to be a little bit of a higher interest rate on these loans. So you might be paying a little bit more, but you also have a lot of added benefits on top of that. These can also close in a typical 30-day fashion. So one of those things where you would want to get pre-approved by the lender, and you would still be able to kind of shop around just as any other normal buyer. One of the restrictions with this is that you can really only purchase a primary residence with this loan. You can sometimes have a primary residence with an ADU, but this is not meant for a 2 to 4 unit investment property where you can house hack or something of that nature. So just kind of keep that in mind when you are looking at these loans as a potential solution for you. I also want to make the disclaimer that I am not a loan officer or a mortgage broker. So just know that a lot of this information, always want to double check with the lender and understand what those limitations are. If you need a recommendation for a lender, feel free to reach out. I have contacts all over the US that can help you really figure out what the best solution is for you. One other tip I would recommend is that it is incredibly helpful to actually have a place where you have kind of settled down both professionally and personally. So that way it makes it a little bit easier for that transition, especially if you're kind of thinking about this long term. You might want to be able to have a little bit more stability in your life before you really make this large purchase. But that's one of those things where you would want to talk with a agent, talk with a lender, and really understand what your options are and what that might be. So with that, thank you so much for watching, and please give a like and subscribe if you thought this content was valuable, and thanks so much for watching.